All right. Matt, the mortgage guy. In today's video, I want to talk to you about the Fed increasing the Fed funds rate this week. You're going to hear it all across the news. The Fed is increasing interest rates. Some people are going to say that they're increasing mortgage rates. Other people are going to say other things. Some of it is true. Some of it is not true. Some of it is close. Some of it is way far off. In this video, I'm going to dissect exactly how it's going to affect you, how it's going to affect different types of loans, and what to look for over this next week, over the course of the remainder of 2022, and what's going to happen with mortgage rates and interest rates across other things. Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, licensed in 48 states. If you want to contact me and my team, go to greatmortgagebroker.com, fill out the form. We are happy to help. I like to bring you information that just provides some clarity in a really busy world with a lot of information, some of it true, some of it false, some of it misleading on purpose, some of it misleading just because folks don't understand. When it comes to the Fed funds rate and its correlation to mortgage rates, I see bad information all over the place all the time. So that's the main purpose of this video. But I want to talk to you about the Fed increasing the Fed funds rate and what it is going to directly affect. Because this week, July 27th to be exact, the Fed is going to more than likely announce that they're increasing the Fed funds rate by 0.75%. Now, it makes for a fancier headline. It makes for a clickable article online to just say, interest rates are going up 0.75%. I've even seen, unfortunately, people in mortgage and real estate say rates are going up by 0.75%. Beware, buy now, whatever the heck it is to get you to click or whatever. Just not the case. So let's rewind. I'll give you a really simplified explanation of what the Fed is doing and how it works. The federal funds rate, for all intents and purposes, is the rate at which financial institutions lend to each other. Obviously, if they're paying more to lend to each other, it's going to affect other types of loans. So in general, interest rates are going to go up. Interest rates are going to go up on car loans, on credit cards, on your student loans. The good news is they're going to go up on savings accounts as well. Adjustable rate mortgages that are tied to some of these indexes are going to increase as well, right? And so that stuff is true. With mortgage interest rates, it's a little different. The main thing, in my opinion, being is that we know and have known for a long time that the Fed plans to raise this Fed funds rate, which they took down to near zero, to somewhere between 3.25%, 3.5%, maybe up to 4% by some experts' estimations. So, knowing that we already know this, it's relatively priced in to where mortgage rates are today. Depending on where you go, what type of loan you're getting and all this other stuff, you know, Mortgage News Daily will post that a 30-year fixed rate conventional loan is at about 5.5%. It's at that rate, and it's gone up quite a bit this year, partly because we know all this stuff that the Fed is up to. We know that they're going to increase rates in July. They're going to do it again in September. They're going to try to get to that benchmark target that they have, whether it's 3.5 or whether it's 4, it's somewhere up there. It's currently at 1.5 to 1.75. And for some history, we were really near zero and didn't do anything to the Fed funds rate since 2018 it was. And then come March of this year, 0.25% increase. May, 50 basis point increase, which is 0.5%. June, 0.75, 0.75%. July, almost unanimously, everyone agrees they're going to do another 0.75. So it's going to go from 1.5 to 1.75. That's the range. It's the target range. Up to, what's that, 2.25 to 2.5? So we've still got another percent or so to go, meaning September, more increases, more Fed meetings throughout the end of 2022, more rate increases, right? And you can expect the CD at your bank to go up, savings rates to go up. adjustable rate mortgage that's tied to LIBOR or some other index, that will go up. Student loans, which I remember when I was in repayment and we had student loan rates in the 2s, those have already been announced for 22 and 23. Those are at 4.99%. Credit card rates will go up. The rate you pay on a car loan will go up. All this stuff will go up. Mortgage loans, I wouldn't bank on it. I wouldn't bank on this having a direct effect on mortgage rates, especially immediately. And that's where folks need to really understand. They don't make an announcement Wednesday, and then I look on my rate sheet on Thursday and rates are 6.25. That's just not how it works. You know, the mortgage interest rates that move daily, multiple times per day, are going to depend not just on what the Fed is doing, but what they're saying, what their future plans are. And a lot of their future plans are laid out well in advance of having the meeting and actually announcing 0.75 basis point rate increase. So I think that I got that off my chest. I feel better because there's going to be a lot of information out there about the Fed is doing this. The mortgage rates are going to be 10% by the end of 2022. Just not the case, right? Could we see rates go up a little bit? Sure. And a lot of this stuff, we don't know what is going to happen. Jerome Powell, who runs the Fed and is in meetings making these decisions, has made it really clear. We're going to follow inflation. We're going to follow the data. We're going to figure out day by day and month by month what the best course of action is. A little bit more aggressive increase to the Fed interest rate if we don't feel like inflation is coming down fast enough. Remember, we've got inflation at 9%. By some accounts, it's probably higher. In order to tame inflation, they need to raise interest rates. They need to make lending more expensive to quell demand. And that, is going to change course depending on what inflation data says, right? If inflation gets under control, if they can tame it and get it to a reasonable level by the end of 2022, a lot of people think we'll get that Fed funds rate up to 3.5%, 4%. And then if it kills inflation and inflation goes below where they're trying to get it, they well may correct course. A lot of the dot plotting that the Fed does, talking about what they're going to do in the future, shows them increasing this Fed funds rate and then a U-turn in 2023, not back to 0, but if we get up to 4 and then come back to 2.5, that's going to have a positive effect on mortgage interest rates. So stay tuned. Know that this meeting this Wednesday, this announcement this week, does not have a direct correlation to mortgage rates. The mortgage rate you get next week isn't going to be 0.75% higher than the one you can get this week. That's just not how it works. If you want mortgage rate information, you can go to Mortgage News Daily. I'm not affiliated with that site, but it's just got, a nationwide average you can look at for what mortgage rates are doing. And they're not going to ask you to fill out anything and then have 77 people call you. That's why I direct people there versus some of these other sites that are lead aggregators. If you want to reach out to my team, again, greatmortgagebroker.com, get yourself pre-approved, see what the rates are at, see what your budget looks like, see if it's time for you to buy. That's the thing to remember. You're not timing interest rates. You're not timing the real estate market. You are timing when you're personally ready. Hopefully this video was helpful. In the comments, let me know what you think. Let me know if there's anything that you feel like I missed. Always looking for feedback, always looking to get better every day. By the way, Get Better Every Day is the new podcast out on Apple, Spotify, all the places. There'll be a link down below where you can check that out. Just launched July 22nd, 2022. Every Friday, I'm going to drop an episode talking to people across all kinds of different genres, sports, business, entrepreneurs, investors, the whole gamut, getting better every day in multiple different aspects of their life. So passion project of mine that I thought that maybe I'll mention. So check it out. Thanks for watching, guys. Hope this helps. Until next time, we gonna see.